Dear traders, ladies and gentlemen, welcome to our daily trading webinar series, Real-Time Daily Trading Ideas. Today it is Monday, the 9th of July, and of course we want to start on the week with you and our professional traders to show you the markets and see what daily trading or what weekly trading ideas are ahead in this week. Before we begin, please have a look at our risk disclaimer. You are trading with leveraged products at Admiral Markets. Forex and CFD are leveraged products, and losses can exceed your deposits. You should always be aware of the risks in trading those products and also test them out in a demo account first. Yes, and as always, we are starting the week with Jay Medro, and I think we don't have to waste any more time. Jay, you get the monitor now, and then you can show the screen, and then you can start right away.
Good morning, traders. Good morning. Thank you very much for the intro. Exactly. Let's not waste any time. Let's get going right away. I hope you all had a good weekend. And we start with the headlines, as every morning. Current environment, risk on sentiment. Astonishingly enough, we saw Asian equities up. China was green across the board. And we already had a Goldilocks scenario on Friday evening into the US equity close, where Wall Street was closing green. We had a mixed US jobs report, but the interpretation by the market in terms of the equity investors was what we call Goldilocks, i.e. we have economic growth, but no inflationary negative pressures. So that's what's called Goldilocks, and hence the market reacted accordingly. Then this morning, or late, I think it was this morning or maybe late last night, I don't recall, UK Brexit Minister David Davis resigned. Two more junior ministers out of his office resigned along with him, and his reasoning was that Prime Minister May's policy would leave the UK in a weak negotiating position. Now, I had to stop for a second and think, is this actually going to be good or bad for the pound? But solid, strong opening into Asia, and then hit pound versus yen, i.e. shorted it real quick, took a few pips off of it, and now we see a positive interpretation by the market. The market thinks this is actually a good thing. Pound rallying this morning really strong next to the Australian dollar. The US dollar is under pressure. You can gauge that by having a look at the DXY, the dollar index. The US dollar versus 8 of its peers, heavily weighted versus the euro. Roughly 60% of that basket is versus the euro. We also saw this morning antipodians, especially the Aussie dollar, strong on strength in oil, even though oil is coming off a tiny little bit. As I look across the board, it's 73.55, the futures front month trading currently, and copper also coming off of its top edge. But overall, we did see strong oil and metals prices, and then we had a larger than expected. There they are, the magic words, than expected. Anytime a deviation from expectation gives us traders volatility, i.e. opportunities to make some money. So we had a larger than expected Chinese foreign reserve, and that led to a stronger CNH fixing. Sorry, I shouldn't read former, stronger. So we have the 2/10 yield curve in the US and now at levels last seen 2007. Now recall, once the 2/10 curve, the yield curve inverts, i.e. turns negative, meaning shorter term yields are higher than longer term yields. That is a warning shot across the bow for the economy of that nation. In the past, in 100% of cases, an inverted yield curve caused a recession 12 to 15 months down the line. So we don't know how long it would be once it inverts, but we do know historically we have a 100% hit ratio in the history that a recession will follow. Not to get too depressed about it, but tons of banks, investment banks, sending out research this morning on getting negative the tech sector, getting negative the FANG stocks, getting negative US equities over the summer. And rest assured, that is normal seasonality. Some of you may have heard this, sell in May and go away. Basically, that phrase only alludes to the seasonality aspect, that over the summer, also given the fact that we have lower liquidity, we do tend to see a tendency for equity markets to struggle. So maybe if you're going off for a while, like I will, this is my last morning meeting, then I'm heading home to the US, and I'll be back in 3 weeks. So in 4 weeks time, we'll be doing the Monday morning meeting again, guys. So in the summer, hedge your portfolio, buy some out of the money, tail hedges, and enjoy the summer. Recall, on Friday, the US implemented new tariffs, 34 billion worth versus some Chinese goods. So the first real life action is implemented, and that's not boding well. Have a look at our open position. From June 25th, we are still short euro versus the Swiss franc. Now we are seeing a compression higher into a top edge, and first position is on, second position hasn't gotten triggered yet. Very astonishing. If you look at the euro dollar and you look at where the gamma hedging is going to start, you'll see the 118 level in the futures and the 119 level popped up on Friday. Why? The reason why the euro is seeing some strength is because of some ECB sources that stated that some council members are not happy about the market pricing in the first rate hike by the ECB late 2019, i.e. December 2019. In fact, they think it should be coming earlier, and we'll talk about this in a second. Strength versus weakness this morning, as you can see, this was the 9 a.m. Frankfurt time, lots of strength in the Aussie dollar. We've known this for a while because the Commitment of Traders report indicated to us there's a long trade in the Aussie dollar. The reason why it didn't start happening sooner is because the US dollar paid out of the G8 the highest rate, and it turned into the new carry long currency. And we saw global flows out of the Aussie dollar and New Zealand dollar, which were the traditional positive carry currencies, into the US dollar. But now everyone, their grandmother and my dog, are short Aussie dollar on the buy side. So maybe this is the firing pin that will start the short squeeze, and then happy days. I've been long the Aussie dollar for a while. Risk events this week, it's a pretty light calendar. It's not that easy to gauge the pre-positioning from my colleagues at the banks and funds, but nevertheless, I'll point out that we do have the Bank of Canada rate decision on Wednesday. It's expected to hike by 25 basis points. We have tons of speakers this week, and we have inflation numbers out of the US, which is quite important. Double whammy, we have the CPI and the PPI. Here we see on Wednesday PPI and core PPI. I'll talk on that in a second. And then we'll have the CPI on Thursday and core CPI. Inflation is the name of the game, as well as GDP growth. He who predicts GDP growth the best makes the most money. He who predicts inflation and inflation expectations the best makes the most money. All right, Canadian dollar, as I said, Wednesday we have the overnight rate statement and monetary policy report and press conference. So they're expected to raise by 25 basis points from 1.25 to 1.5, which will then be the second raise for this year. There's currently a probability of around 86% priced into via the short overnight index swaps. Since the last labor data, that has increased by 6%, and on the back of that, you saw some strength in the Canadian dollar. Canadian economy is currently running close to full potential, which is a good thing. But what is the Bank of Canada really focusing on currently? Well, they're focusing on GDP data, i.e. growth. And it's expected that the second quarter of this year, GDP grew roughly around 2%. And they're also focusing on business outlook surveys. So these are what we call qualitative surveys, right? They're very interested in seeing what are their businesses that are basically making up their economy thinking about the near future. Now, during the press conference, we obviously expect questions regarding global trade tensions, which all recent central bank speakers have touched on. Everyone is saying this is insane. This is hurting global growth. What are they doing? This is not a political morning meeting, so all I'm thinking is that Trump actually does want to even out the score a little bit, because the US taxing the shit out of US products like crazy. Socialists versus capitalists, and we have a capitalist guy in the White House, so he wants to even the score a little bit. Let's see how far he's going to take it. On the euro side, Thursday we have the monetary policy meeting accounts. So for those of you who don't know this, there's always the meeting, and then there's the accounts, and comes the week after the policy meeting. Important, why? Because analysts in the banks and funds will actually go into these meeting accounts and look for clues, something that may have not been mentioned in the press conference, something that may have not come out during the Q&A in the press conference. So the meeting accounts will always be read word by word and compared to prior communication. Has anything changed? Has any member said something? Has a number of members said something that is of importance to the market? And then if there is something in these accounts, then the currency reacts accordingly. So why are we looking at this one? A recent communication, as I said earlier, is that some of the members of the Governing Council are uneasy with market expectations of the first rate hike coming in December of next year. Now, in the communication last week, the ECB said, guys, dear market, we will hold rates steady at nil until the summer of next year. And here's the kicker. In October next year, Draghi's term will end. To be seen if Whiteman will actually be the new guy, but the market will have enough time and there will be enough headlines for us to make money out of that. Because if Whiteman comes, he's actually a hawk, and that would mean less expansionary monetary policy would be the interpretation. So the thinking right now is that, hey, maybe Draghi will hike towards the end of his term one more time. And that is the reason why the euro is seeing strength. It's not based on economic growth, which is faltering a little bit. It's solely based on sources reports that some members are uneasy about the market not pricing in an earlier rate hike. So Draghi will speak today in front of the financial committee in Brussels, I think it is. So maybe good opportunities for day traders to hear if he's talking hawkish or dovish. Can't be in the interest of the ECB to have a strong euro. Cannot be in the interest of the ECB, right? So this is really interesting opportunities for us. I know one of our traders in this morning meeting here made some money hitting into that euro strength on Friday on the back of the non-farm numbers. Dollar, PPI on Wednesday and CPI on Tuesday. Like I said, CPI will likely get a little bit more attention because it remains above 2%, and that's the target by the Fed, is the 2% magic number. And please, guys, recall that the Fed usually prefers the PCE over the CPI. And they know that the CPI is running above 2%, and they have already communicated to us that they will let it run above their target rate for a while. Core CPI is forecast to increase not 2% month on month, and that takes the year-on-year to 2.3 from 2.2. So that's all dollar bullish, US dollar bullish, okay? And this morning, the dollar is seeing some weakness for not any particular headline reason. So my assumption is that it's positioning. But we won't get the positioning because the commitment of traders report doesn't come out until 7:30 p.m. UK time tonight due to the holiday on Wednesday. Pound, Tuesday, for the first time, we will see monthly GDP data. They just introduced this, so this is going to be interesting. Expectation is for a rise of not 3% month on month. Pound is seeing some inflows currently. The soft Brexit that is shaping up because Davis has left, he was more of a hardliner, actually means we want to try to trade the pound from the long side. So if you have pound, if you're a pound trader, if you're interested in pound, see if you can buy bottom edges. Recently, we had some pickup in industrial production, and we had some really solid consumer-related indicators recently. So the economy is doing quite well. If there's now a soft Brexit shaping up, which I've always said from day one, there's not going to even be a Brexit, which is still my base case assumption. But I don't have a crystal ball. It's just that it makes no sense for them to really step out. But again, it's not political. I'm just saying economically. But they're doing really well. Despite everything, their economy is shaping up okay. All right, CFTC, like I said, the cut doesn't come out until 7:30 GMT today because of Wednesday's July 4th holiday in the US. Volatility in the euro has come off because it's in a bull trend right now. Trending markets have less volatility. Pound coming off, also bullish trending. Yen coming off. Interestingly enough, if you look at the Chicago options, risk reversals and implied vols, you will see there's still a very large priced in assumption that the yen will see some strength. So keep that in the back of your mind. There's still a looming risk-off scenario based on billions of dollars betting on the yen seeing some strength, and the VIX is coming off as well. This could be the spike higher before the sell-off into the summer, because here, as again, trending long markets exhibit low volatility. Option pricing for this morning, bullish for Monday, long euro dollar, long dollar yen. It's around 110.5 currently. Long Aussie dollar, that worked beautifully. Bearish Monday London session, nada, nothing. In terms of option flows, bullish for Monday, Aussie dollar, Canadian dollar, and the Swissy, and then bearish pound, euro, yen, and gold. Gold naturally, as the US dollar is weakening this morning, I would rather play gold from the long side, but okay. So out of this, naturally we would look at long Aussie dollar or Aussie yen if you were to be inclined on a pullback for this morning. Also recall that once New York comes in, they tend to and can reverse London trends. So if you saw a trend in the London session, very likely that the New York boys can revert it. But it always comes back to value and volume. Where can us, the big boys, get into positions? Potential trades for this week, I want to look to long the Canadian dollar versus short yen into the policy statement on Wednesday. So that's what I'm hunting for. It's an easy trade. Oil is doing well, a large correlation to the Canadian dollar. I perceive Wednesday to be a buy the rumor, sell the fact type of event. So let me see if I can't long the Canadian dollar. And then currently we have risk on despite trade wars, which is inherent strength of the market. The market is communicating to us, I don't care. Let's make some money, let's go up. All right, the risk to the trade is obviously that the market sentiment would change, that we would see strength coming into the yen due to risk off, or the Bank of Canada would disappoint. But I don't think Polos would do that. 86% probability priced in. Someone would hit the mic right now and talk contrary to a hike if the Bank of Canada were to be so inclined. So I don't think they're going to disappoint. I think they're going to hike, and we want to use that opportunity to make some pips into the hike. So it looks pretty symmetrical. I know we're trying to get into liquidity from Friday. And we have lots of POCs there as well, so there's good liquidity for a potential long. And then we're not going to get greedy. We're just going to go up to former fair values and take roughly 80 pips and pocket them if we get triggered. All right, so guys, that's it. 19 minutes for the first time. We're in time. Thank you very much. Let's look at your questions. Why is the Aussie strong but not Kiwi, especially Kiwi has a better positive carry? Thank you. Good question. I like your thinking, and I think I alluded to it already. The carry currency out of the G8 now is the US dollar. The Aussie is strong because of strong metals prices, strong Aussie dollar, a recovery in bear territory Chinese equities, leading to a risk on sentiment, and everybody, their grandmother, the person from the shop around the corner, and his dog are short Aussie dollar. All right, so they're going to get screwed on the short squeeze, which is beautiful for you if you want to long it. Aussie New Zealand long, we've talked about that in the past as well, is always Aussie New Zealand is always a very good pair if you want to get away from US and European crap. If it's just a difficult week, that's a good pair to keep focus on. So hopefully that answers your question. Great, excellent. Good question. I like your thinking. Look at where the carry is, exactly. All right, guys, no more questions. In that case, I want to wish you a very good week. I'm going to miss you. I thank you. I honestly thank you for showing up here on a Monday morning, spending time with us. I think that's great. I hope you're learning a little bit. If you want some changes, let us know. My website is j-medro.com. You can always reach me. I know it's in German, but obviously I speak English, so there's my contact details there. And then I'm off to the States. I'm looking forward to it, and I'm happy and looking forward to seeing you guys again in 4 weeks' time. So enjoy the summer, make some money, be careful, not much liquidity, but that also means us big boys, we have a great time manipulating the markets up and down, because when there's less liquidity, it's easier to manipulate. You don't need that much money to actually get rid of a few price levels up or down if you were so inclined. So happy summer, thank you for your time, and I'm looking forward to speaking to you again in 4 weeks. Bye guys.
Thank you, Jay, for your detailed analysis, and of course, every participant. And we want to wish you a nice vacation, and we'll welcome you back when you are back in Germany. Yeah, dear traders, of course, we want to wish you a happy and successful week and good trading. If you have any questions, you can contact your local support team at your country's website. Please visit admiralmarkets.com or your local country page. Yeah, if you have any questions, so please feel free to contact us. We wish you nice trades and a happy week, and see you again tomorrow at 11, then with the next webinar. So nice trades. Have a nice day. Thank you, Jay. Thank you, dear participants. See you tomorrow.